We do these monthly in an effort to bring you some good, great content from guys that we know in the industry that we trust, that are going to spend an hour with you and teach you something that you can take home and use in your trading setups next week. So we've got 3 new people on, so I'm pretty excited about that this week. Once again, our company is Trade Thirsty. You can always see the next coming events and recordings from old events at tradethirsty.com. So today's roundup looks like this. Matt Brown from Newbie Trader, and there's my friend Matt. He is going to be talking about Gann, Elliott, and Fib. He's going to be talking about how he identifies pinpoint market turns. Second up is Jake King. He's a biotech guy. He's going to be talking about how he can profit from it no matter what market, what time of day. Jack Gleason, this guy's hot on the scene right now, y'all. Going to be talking about Nadex. It's also, I'm going to say, I'm pretty new to the trading world here in the past couple of years, so excited to hear what he has to say about his favorite 6 setups. And John Seville. Now this guy, he actually wouldn't even give me his topic until he watched how the market opened up last Monday. So that's pretty serious. All these guys trade. All these guys are active, and so you're going to find that the content they give you today is going to be the real deal Holyfield about what's going on right now in our situation. The way this will work is I'll give them 1 hour. We are recording. We'll try to get the recording to you as soon as we can, so watch for it in your email. Some of these guys will make offers to you today. We only keep them up for about 48 hours. So you know how it is in trading. You got to be decisive. You got to make a choice. So we hope you enjoy today's content. You can always send me an email to team@tradethirsty.com and give me recommendations on what we could change about these events, or people you'd like us to see, or topics you'd like for us to talk about. So I'm going to go ahead and go with my first speaker today. This is Matt Brown. I'm going to turn the mic over to him, if my little thing will let me. I'm about to give him the power. All right, Matt, you are now organizer and presenter. I'm going to let you mic up. I'll let you know when we can see what you see. I see your PowerPoint.
Fantastic.
And let's make sure you can see the questions. Can you see the questions so when they start asking questions?
Yep, question panel is up, and I'm ready to go.
All right. Well, you have 1 hour. Good luck.
All right. Thank you. Thanks, Jeanette, Hubert, and all the folks over at Trade Thirsty. I'm delighted to be here, first-time presenter, and I have a lot to show you today, and I really want to give you all something that you can take with you and implement starting Monday morning. So I will be giving you an opportunity and an offer at the end, but don't worry about that. And like Jeanette said, we are recording this, so really just kind of pay attention, because I'm going to be going through quite a few things here, and I really want to make sure that you get it, and we can always circle back around and touch up on anything that you might have missed at a later point. So my goal today is very simple. I want to teach you how to identify key support and resistance confluence areas using a high probability trading technique. And before we dive into it, I just want to kind of give you a feel for what I'm talking about. This is yesterday's market. These levels that you're seeing here, these teal bands, these are our micro confluence bands. We've been presenting these to the members in our trading room probably 4 or 5 years now. Our members have these levels daily before the market begins, and this is just looking into a given day. These levels come up fresh each day, and they auto-populate on our members' charts using like NinjaTrader, and it just gives them an idea of when the market's getting here, where you're more than likely going to pivot, rotate. It's an area, if you're a very short-term trader, where you might want to take profits. It's a level where you could trail a stop up, a lot of things like that. So that's on the very quickest of time frames intraday. And we also give what we talk about is key buying and selling levels. Now here's looking back over a whole week. Now this is actually a screenshot from 2 weeks ago. I was in New York with Jeanette and some others, the Traders Expo this last week, and this presentation is similar to one I gave there, but I did throw in a lot of new slides with some current charts. But this particular slide was from 2 weeks ago, and just, again, kind of pay attention. The yellow band you're seeing there, that is nothing more than what we identify as our version of the daily pivot, and then you have 3 sell levels above it, 3 buy areas below it, and then we even identify kind of the key buy and the key sell, which is where we think the range of the day is going to be. So we give those, again, these levels are separate from the ones I just showed you. Again, these are daily levels that come up, but it's the key buy and sell levels for the day. And then this is just kind of zooming in on the Friday of that previous chart. This is just a zoom in, just looking at one day, a typical 15-minute chart. This chart probably looks pretty familiar with you from the candle perspective, but we also look at things a little differently. We use our version of a Renko candle, which we take kind of time out of the equation. So here will be that exact same chart, looking at it with our modified NT Renko candle. And you can see we kind of come down and we did some rotations early in the day between the pivot, our first resistance point, and just like any support and resistance, once an area is broken, it typically will move up into our next level of resistance here, come down, use that previous resistance now as support. It hits a heads breakthrough, and then we kind of rotate it in and out the day. And you can see the solid bar at the very top, how it's solid red, and these other ones you can see have some opacity to them. The solid bar would be, okay, that's our key sell level. These other ones, we kind of think of them as minor sell levels, and we think that that's also going to help band the market for the day. So where we have our key buy and our key sell levels, those are the areas we think the market is going to range between, and then in and around the pivot. And you can use these levels more for intraday swing type trading, a little longer hold. The initial chart I showed you was a chart of very minor intraday levels, and those are more for scalping style of traders, or very short-term traders. And finally, just another look. This is a current chart from this week, and this is again showing the kind of the daily buyer and seller levels with our version of the daily pivot. And if you look kind of beyond that, you can see a solid or a red line up here at the top. That is a weekly sell level, a weekly pivot, and down below here off the screen to the bottom was a weekly buy level. So going in on Monday, our members, and they had these levels on their charts for the entire week, and we said, hey, this is where we think the market's going to chop around and use as its home base for the week. And down here below we had an area that we thought was going to be the key support area for the week, and then obviously we had our key resistance area for the week. And you notice coming into the overnight on Friday, these gray areas are the overnight sessions. Coming into the overnight between Thursday and Friday, they went right up to our key sell level, which happened to line up that day with our weekly pivot that they had 5 days earlier. And then the market traded off and traded back towards the daily pivot and the weekly pivot. So anyway, just wanted to kind of frame what I'm going to be teaching you and how to come up with these levels. I'm going to give you the tools that we use in our system for coming up with these levels, and hopefully show you a few other cool things along the way. So, who am I? My name is Matt Brown. I am not so much different than who you are. I'm just an everyday father and husband. Roll back the hands of time, about 12 to 15 years, and I was a student just like you, learning from other traders. And I went through a organization that's now owned by TD Ameritrade. It was called Invest Tools, right? And it provided some basic investing education, and I took my introduction into the markets from that, and then found people like Hubert and other mentors, and dove into the markets, started doing my own study, my own analysis, and read hundreds of books on trading. And then here I am, the student becomes the teacher, and I started doing this, and I got to the point where my trading was proving to be pretty encouraging. And at the time I was working in Corporate 500. I was very young executive, and worked across some multiple organizations at a very high level. And my trading got to the point where I was sitting in hotel rooms and I was trading in the morning, and then I would go on presentations or sales calls or whatever in the late, for lunch and dinner, traveling all over the country. And I decided just, my trading was going to carry me, and I was going to walk away from corporate America, and that's what I did. And then for the last 10 years, I've just been sharing what I've learned and with other traders. I've taught thousands of traders around the globe, everybody from, folks coming off the floor to soccer moms, widows, dentists, truck drivers, doctors, you name it. You know, there is no secret sauce for what makes a good trader. Anybody can do it with the right training. And, you know, just on the left, that's kind of a shot of me and my family. We live in the Carolinas. I'm just outside of Charlotte, North Carolina. I live in South Carolina, just across the border, but we're just a bedroom community of Charlotte. And the picture on the top is my wife and 3 kids. And our vacation place we go to in Hilton Head Island. Charlotte's kind of nice because you got the beach 3 miles or 3 hours away, and you have the mountains. That's a picture of us over in Tennessee. Hubert's over that direction to Kentucky, but you know, we can get to the mountains, we can get to the beach, and trading provides you with that nice style of life, right, where you can spend time with your family, you can, you know, attend your kids' sporting events, that sort of thing. So anyway, a little bit about me, but let's dive into the presentation because I have a lot of stuff I want to teach you here. And if you stay until the end, I'm going to give you free bonus access to what we use daily in our room. It's a high probability gap trading system. And I'll also provide you with a free download of that special Renko candle that I use. A lot of people will sell a similar type candle online for upwards of $300. Don't worry about it. It's going to be a freebie, but and I'll show you where you can go to get that at the end of my presentation. So please just remove your distractions, you know, email, computer, phones. Don't be looking at charts. Just follow with me because I'm going to get into some pretty technical stuff here. And before I do, I just want to let you know everything that I'm showing you is based on historical information. We've been using these styles and techniques. There's no guarantee it's going to work tomorrow. I don't want anybody taking the information I have and diving straight into the markets with it. I want you to back test it. I want you to test it on your own and verify your results. You know, I'm going to be showing you some real solid techniques here, but just know that anything in the future markets is to be thought of as high risk, and I want you to only use at-risk capital for anything you do moving forward. So let's get into the first topic. I want to talk about Fibonacci. Leonardo Fibonacci has been around since 1200 AD, and just type a quick yes in the question box if you're familiar with Fibonacci, just a Y if you're familiar at all. Okay, a lot of you are coming in. I've seen a lot of yeses, but for those of you who aren't, the Fibonacci is simply this: 1 plus 1 equals 2, 1 plus 2 equals 3, 2 plus 3 equals 5, 5 plus 3 is 8, et cetera, on down the line. So it's a number sequence. And what's interesting about it, it's seen in nature, it's seen in the solar system, the human hands. A little bit of trivia for you. You know why you think people are attractive? Like you just see somebody and you're naturally pulled towards them. And I'm not talking before they even open their mouth, just on sight alone. It's because they typically, the most beautiful people in the world, the actors, the actresses, models, they have that perfect Fibonacci relationship on their face between their head, their eyes, their nose, and their mouth. When they line up perfectly in the Fibonacci sequence, you naturally find them more attractive. I don't know that mine line up perfectly. I don't know if I would fall into that most attractive category or not. But hey, I have a beautiful wife, so maybe it was my personality. So basically, if you take and divide that number by the smaller number, we have Michael saying he doesn't have sound, but the large way. If you take and divide the larger number by the smaller number, you get that relationship of 1.618, and that becomes a very key number that the Fibonacci sequence uses. If you take the inverse of that number, you get 0.618, and that becomes our golden ratio, and we use that level a lot. 1 minus 0.618, you get 0.382, another key level we use. And if you take the square root of that number, you get 0.786, another key Fibonacci level we use. So we'll just keep it at that for now, but let's dive into some charts. If you look up on the far left, again, we're using our special Renko candle that I'm going to give you a download to, but we just take a measurement off that bottom left and take that first swing measurement to the high before it starts pulling back this first red candle here, and it comes down to its 50% fib level. It finds support there, and then we bounce. And in the area, I use a negative fib number, a negative 0.236, and that actually becomes a fib extension level. and then a negative 0.618, another extension level. But what happens when the market bounces off of one of our key fib levels and closes above my 23% extension, I consider that a valid fib and a valid move. So it kind of stays on the chart. And then you can move the next higher time frame or higher swing. So I just pull the fib up to the next swing high. Again, it comes down, hits its 50%, ultimately reacts to my 23% extension there. Again, because it didn't pull off that level, my next fib, I'm going to use that point as my next swing high. So I just keep doing this, and basically by just drawing these next larger and larger and larger fib levels, it gives you areas that you confirm to be a good Fibonacci reactive retracement. This one pulls down to the 38% level, bounces to the 23%, so the next level up. So it just, we just keep drawing them up. And the same thing, when we get to the top, you draw your first fib to the downside, it pulls back, reacts off the 78, clears the 23, so we draw the next one, pulls back to the 50, clears the 23, so we draw the next one, pulls back to the 38, reacts to the 23. So what's the point of me telling you all that? So we have all these areas that we deemed as viable Fibonacci's. Well, when you put them all on the chart at one time, what a mess, right? So you have all these levels, all these areas that are overlapping, but it gives you some very, very key areas to pay attention to moving forward that we call areas of confluence. So we have multiple areas that come off these different time frame Fibonacci projections and levels that we had, and we see where they overlap. And these areas that overlap I've marked in gray, and we'll just note them as areas of confluence. So that's kind of how I use Fibonacci. I look at multiple swings, confirm them to be good reactive levels, put them up on the different time frames. Each time you're drawing a swing at a longer swing, it's really the equivalent of looking at a higher time frame. So we put them all up there where you have multiple levels overlapping. We note them. In this case, I just put a gray area on it, and we think, okay, that's a good confluence area. So let's move off of the Fibonacci. We'll come back to it, and we'll do some live, but let's get into Elliott Wave. Now, I use Elliott Wave in the simplest of forms, and there's a lot of theorists out there, and the joke is you put, 5 Elliotticians in a room, and you'll come up with 5 different wave counts. And it's true. I have a software that does wave counts for me, and it gives you 3 or 4 different ways to look at it when the computer's doing it. So I just keep it real simple. Think of Elliott Wave. Let me see a yes now for how many people are familiar with Elliott Wave, at least in the simplest format. And I'm going to talk about it in basics of 5 and 3. 5 waves up, I'm going to refer as, we have a smart crowd here. I applaud the Trade Thursday folks. Most of you people have been around trading, it looks like. So 5 waves up, 1, 2, 3, 4, 5. We call those impulse waves, and it could be in the down direction as well. I'm just saying a series of 5 waves. And then you have what we call corrective waves that we use letters as the nomenclature, A, B, C. So basically just think of 5 waves as impulse and corrective waves as 3. And what's really, really cool about it, like this wave 1 to 2 here on this impulse wave, depending on the time frame you're looking at, that can be comprised of an ABC corrective wave. And then this 3 wave up could be actually 5 smaller waves, impulse, 3 corrective. So it's fractal in nature, and but we just think of it in the very basic terms, 5 and 3. If you can remember 5 and 3, and oh, by the way, those are Fibonacci numbers. If you can remember the numbers 5 and 3, you'll know everything you need to for our look at symmetry as it comes to Elliott Wave. So what do we do with it? Well, if you study Elliott Wave at all, typically wave 1 is equal to wave 5 in length. Typically the pullback wave 2 is typically equal to the wave 4 in length. And same thing with wave A in relationship to wave C. Now, does it have to be? Absolutely not. This is just a generality, right? 1 is 5, 2 equals 4, and A equals C. Well, we use that to our advantage, and it's very powerful and very predictive. Pay special attention here. What we do, we assume that every corrective wave has the opportunity to be a reversal. And if it reverses, there's one thing we look for initially to set up a trade for us. And this is key. Using that concept of wave A typically is equal to wave C, as soon as we see SEE, as soon as we observe that wave C is getting longer than wave A, then we say this has a chance to turn into a wave 3 of a 5 wave. So wave A could end up being wave 1. Wave B can end up transforming itself into wave 2. And then when C gets longer than the length of A, we assume it goes to the 161.8 Fibonacci level, right? And it becomes that third wave. So there is actually an opportunity for you to trade from that symmetry level of C to wave 3. And again, this is all fractal in size. So let me show you an example of this. So here is that same chart we drew fibs on a minute ago. Looking at the far left, if you draw this wave, the first wave, and use just a symmetry tool, in this example I'm using a Fibonacci extension tool, and I'm just pulling the 0 point to the bottom of that first swing. I'm showing 100% extension, so that would be where wave C should stop. But as soon as I get a confirmation close, a full candle brick above that 100, I'm under the assumption we have an opportunity to eventually get to 161. And I use that basic technique every day in our room, and we do it all the time to find some key levels that we think we're going to react to. And some other areas to note is the level 261, 361, and even 461. It's just projections beyond, and we call those danger zones. Again, areas that you should see a reaction in the future, and it could reverse. So as soon as we, again, from the bottom left corner, make this first swing, and we break 100, we're under the assumption we're waiting for some sort of way to get into a trade, to trade up to 161. And if it breaks 161, we're looking for 261. If it breaks 261, we're looking for 361. Okay, so now let's, just like we overlaid the different time frames on the Fibonacci, we do the same thing here with this very basic concept of extensions. Talk about Elliott wave. So we take that symmetry move. As soon as it goes to 161, we look for the next higher swing, just like we did in Fibonacci. So there's 100. It breaks 100. We look for 161. And we do that on the downside. Again, the first time you get a pivot, you assume every corrective wave is going to turn into a 3-wave down or a 5-wave impulse. Yeah, the numbers are, I'll repeat the numbers for you. The numbers are basically, we're using 100% extension, a 161 extension, a 261 extension, and a 361 extension. And we can provide these for you and go into more detail. But basically, we're just looking at symmetry, and we're assuming that as soon as this C wave gets a confirmation candle close under that 100% level, we're assuming it's going to 161. If it breaks 161, 261, etc. So we look at the next swing, same thing, 100, 161, 261, and then you put all these together, just like we did on the Fibonacci, and you have some areas overlap, where the hundreds line up, where the 161s line up, where you have confluence of these, what we would consider various time frame symmetry moves. Okay? So that's what we think of when we talk about Elliott wave and symmetry. Very basic. You won't find anyone that trades Elliott wave that uses the very basics like I do. I try to keep everything as simple as possible. So this is just the next level of confluence. And finally, I look at Gann, and most of you have this tool on your platforms, but Gann was, he wrote a book back in 1935, The Basis of My Forecasting Method, and he was a great trader. And he came up with this concept of these Gann angles, where he's taking and squaring time and price. Okay, and there's the square of nines. There's a lot of information out there on Gann. Again, I break it down. I studied Gann for quite some time, and I came up with some pretty cool calculators, and I've developed some tools around it. But I interpreted his work and applied it to my special candle that takes time out of the equation. And I came up with this opportunity where we can square price with time just through the chart. So if you take the Gann fan that's on your platform and apply it to the key swing low and key swing high, you have this, 1 by 1, 1 by 2. Again, how many people out here have ever heard of Gann before? TJ asked if these are measured moves. Yes, TJ, they are measured moves. Okay, so we have a lot of people that understand Gann. So the real power is each one of these techniques in and of themselves are very, very powerful and very high probable. But you just have to understand that these levels are not absolute. Each level, just like any other type of support and resistance that's created from them, break down, and you have to understand when can you rely on them more. Well, when we do the Gann, we do the same thing. You look at the fan to the upside, and what I like to do is when it breaks the fourth fan, that's kind of a trend change mechanism for me, and it will go to the next. And you typically will react off these different fan levels. Well, we look at the low, you look at one off the high, same thing. You can see how it's reacting to those fan lines. And again, this chart is a pure price action-based chart. I removed time out of the equation just by the nature of the candle I'm using. It's a form of a Renko candle. It's called the NT Renko, and I'll give it to you for free. And then you throw the other fan on the end. So when you put all three of them on the chart, again, you get areas out into the future where multiple Gann lines are overlapping and showing some confluence. That's as extensive as I get into the Gann. Discovering these angles and everything by using our candles made it that much better. But you can use Gann on time-based charts. These fans work marvelously. Everything that I've showed you here can be used on any market, right? I'm just showing you how I use Fibonacci's and come up with confluence. I show you how I use Elliott Wave and come up with confluence, and I show you how I use Gann and come up with confluence. That's all we've done. It can apply to any markets. I specialize on the index futures, and I do most of my work around the ES. Now, I trade the YM, and I trade the ES, and I trade other things, but I trade the YM in such a form where I look at what the ES is doing, and I look at my key support and resistance level, because that's where the big money is playing most of the time, and that's where a lot of the action is. So it's like the dog wagging the tail. I pay attention to what the ES is doing. I do all my key support resistance work on the ES, and then I look at the YM in a similar fashion, but not with the in-depth. And when I get the reaction in the ES, I get the confirmation in the YM, and that's where I like to trade. I know that's a long-winded answer, but this technique can work on any market, yes. So most traders understand the concept of support and resistance, but they have difficulty knowing when to use which type, right? Yeah, my Fibonacci line works, but sometimes I put an order in and boom, I get blown right through and I get stopped out. Well, guess what? That's trading. You're going to get stopped out. Nothing's perfect. Don't even try to bang your head against the wall and try to figure out why you can't be 100%. If you're 100%, and I don't know what you'd be doing. If you're 100%, you'd probably be broke because eventually something's going to go wrong and you're going to make a mistake. So trading is a risk game. You're never 100% right, so don't worry about being right. Just make sure you get the probabilities in your favor and figure out how you can take some ticks out of the market. All right? So what we're going to do is we use confluence. We look at all these different techniques. We look at all these different time frames. We throw everything against the board, and then we have a system for coming up with these areas. So we overlap multiple time frames. We overlap these multiple techniques. And let's talk about support and resistance real quick. We have reactive support and resistance. That's the areas that we talked about that's defined by the previous price action or behavior you've seen in the market, right? Swing highs, swing lows, opening gaps, open high, low closes, volume profiles, the high volume, low volume nodes, that sort of thing. Areas where the price has been, you draw a line on your chart, whether it's a chant, whatever, it identifies where the market has. We call that reactive support and resistance. We have what we call proactive support and resistance, and that's more predictive. That's the stuff we kind of went through, right? The Fibonacci, the Elliott, the Gann, trend lines projecting out. So what happens when you take all these reactive things you know about the market, the stuff that's easy to see, previous gaps, previous swing highs, low, open high, low, close, volume profile. You throw that all on a chart for different time frames, you know, high volume, low volume nodes, and you take these proactive techniques like I just taught you, and you throw that on. That's a whole lot of stuff on your screen. Obviously, you kind of trade with all that on your screen, but we take and throw it all on there to identify the key areas. So what are we really doing? We throw everything on a chart together. Here's just a simple example to show you, you know, a Fibonacci, an extension, and a fan, where everything lines up, a key level is identified. And those key levels you can project out in time in the future, and they'll react in the future. And when you do that, here's the next time frame higher. Here's an example of a longer-term symmetry move. It gave us a projection of the 23% fib, the 100% symmetry projection, a GAN. So this level, 1834, was well identified, right? 1834 was identified as a key level when the market was way back here, and it comes off stuff that happened a day earlier, or almost a full trading day earlier. So that's the concept, right? We throw these very high probability trading techniques against the wall, and we come up with a system or style to identify the key support and resistance. So I'm going to come full circle back to what we started. Just think about those charts that I showed you when we first started off. I showed you micro confluence levels, I showed you daily buy-sell levels, and I showed you weekly pivot levels. That whole process, we do the work for you. We provide that for you. But this is where it's coming from. It's this type of analysis, this type of work, this type of technique. Now, I want to shorten the window for you to get up to speed on this. Obviously, in an hour-long presentation, I can't teach you everything you need to know around what confluence levels. It's this, though. It's these tools. It's Fibonacci using the key fib levels. And if you want the fib levels, get a pen and paper out or take a screenshot real quick. But the fib levels I use, obviously I use the 38.2% retracement, 50% retracement, 61.8, 78.6. Okay, that's the fib retracement. And then I do what it's a negative retracement. So I use a minus 23.6 and a minus 61.8. That's how I set up my Fibonacci retracement tool. My Fibonacci extension tool, I use I set it up and I use the Fibonacci extension tool as my symmetry tool. So I use 100%, and if it breaks 100, I look for 161. If it breaks for 161, I look for 261, 361, and 461. And then I just use the standard GAN fan, and I use it on top of my NT Rinko candle, which I'll be providing you here at the end of our presentation. So that's it. And I just look at multiple swings, multiple time frames, and I project out and come up with levels for the day. But let's fast forward. Let's use an easy button. Now I'm going to get into a little bit of my offer, and then I'm going to show you some more details. And if we have any time, I'm going to go to a live chart, and we'll do one of these examples live with you. So my special offer for your success, it starts off with I'm giving you something here that's part of one of our key training packages that we use that I haven't even talked about. It's the S&P E-mini Delta tool training. Now this is one of our tools that's the basis for one of our auto signal tools. Now this has a $997 value, and what I'm showing you here is the auto signal tool version that comes off of that Delta tool. But basically, it's a trend following system. The actual signal tool, which is not what you're getting here, you're getting the indicators that are part of this tool. But it's the Delta tool at the bottom. I look at trench warfare between buyers and sellers, how they hit and take the bid and ask, and we track that. That's called a delta. I use delta as a very important part of my trading. So depending on who's winning that trench warfare, you know, that's the little battles. It's part of the bigger war. And we try to identify the trend, and we have tools and things that go with it. So I'm going to give you the candles that are needed, the delta tools that are needed, and anyway, and all the training. So that training is about 15 hours of very, very, very in-depth training around how this tool is developed. Whether you have the tool or not, I teach you everything about it, how we use it in the room. The reason I'm giving you that is because what I think you're going to really like, the fact I'm going to give you access to our live room. Okay, so our daily live trading room, if you were just doing the room, it's $199 a month. That's what the value is on it, and I'm not going to be apologetic. It's a nice room, and that's what we charge. But most of the traders in there pay a discount on that rate because they own maybe one of these auto signal tools or something where the room is just there for support. But in that daily room, we're going to be doing this type of analysis that I just showed you intraday throughout the market session and trying to identify levels that maybe weren't given to you previously. Bonus 2, I'm going to give you the weekly confluence levels, $99 value on those. The weekly confluence levels, that's kind of the first chart I showed you. Now, I stripped out the daily stuff, but that was the weekly pivots that you get them on Monday morning. You have a resistance area, you have a pivot area, and you have a support area. Now, again, if you're in our room, you can get these levels, and you can put these levels on any platform you choose, right? They're just static levels. If you have NinjaTrader, they'll auto-populate on your chart. But if you're part of our live room, we do our morning daily market setup before the market opens, and it's like here's your key micro bands for the day, here's your opening gaps, et cetera, plus you see our charts and you can get the levels. So currently we're only on the NinjaTrader platform, but we will be working to move these into other platforms in the future. But they're static levels, and you can easily enough put the 2 or 3 levels that are representative that day on your charts. And the other one, we have them out there. You can actually upload them into. It's just a text type file. So you can get the levels on your charts easy enough if you're not a NinjaTrader person. But outside the weekly confluence levels, we're also doing the daily buy and sell levels. Again, to refresh your memory, those are the ones where I have a key area. That's the key buy or the key sell, which is going to be kind of where I think the market's going to range today, and then our version of what we call a pivot, and then a minor buys, minor sells. You have 3 levels above the market, 3 levels below the market, plus the pivot. Those levels are available. On top of the daily buy-sell levels, bonus number 4, the intraday pivot levels, that's the ones, again, that are for the scalpers, areas of key reversals, key pivots. Again, a $99 value on that. And the daily key levels indicator, this is a bonus. This just basically marks the high-low of the day, high-low of previous day, half gap, opening price, 4 o'clock close, 4:15 close, Globex high, Globex low. So it just keeps track of the key levels that you want to be interested in trading. And if you don't have NinjaTrader too, don't even worry about that, because I can provide you a link to get a free demo account. You can still use these tools. Ninja provides their platform for free. Yes, you have to have, if you want to trade on it live, you have to open a brokerage account with Ninja Broker to get the live data, but you can use historical data for free, and you can plot these indicators. So we can even get you a free version of a demo. So we have kind of our daily indicators there, and a bonus number 6, another $99 value, our high probability gap indicator. And I'm going to, as well as give you for free today for being here, and I appreciate your time, on top of me giving you that free NT Rico candle, I'm going to give you our technique for coming up with this high probability gap level. Okay, I'm going to teach you how to do it. I'm going to show you the calculations, what we do every day. We have it programmed so the computer does it for you. And basically what it is, if the market opens inside the green box, you have about a 94%. Now these numbers change, and don't quote me, and I'm putting a big asterisk. Future results might not be indicative, and you can lose money, all right? But when we pull this together, about 94% of the time when the market opens in this high probability gap range, you have about a 94% probability that it's going to close the half gap, which is the gold line you see on the chart, and about an 89% chance it's going to close the full gap, which is the red line on this chart. So this is when the market opens, that's the green line, is the open. When it opens in this box, 94% chance you're going to trade towards the gold line before the day's out, 89% to the red line. Asterisk, don't take it for gospel. Things can happen, bad data, whatever. But that's the percentages that we use. And when you open up in the high probability range, you want to start trying to do everything you can to trade towards that half gap. Again, I'm going to teach you exactly all the calculations that we use to come up with that green box. It'll be free for you just for being here today. But I'm throwing in this indicator and tool as a bonus. So let's just review. What are you getting? You're getting about 15 hours worth of instant training access where I teach you everything about our fractal tool. I'm going to give you the S&P E-mini Delta tool training. 997 values, about 15 hours worth of online education ready to go right now. I'm going to give you access to the daily live room starting Monday. We go live every day from about 9 in the morning till 11:30 in the morning. We're only there for the first session. I personally moderate that room. We do it 5 days a week. Take off a week for Christmas, take off a week for the 4th of July, and if I'm like in New York like I was this week presenting, I might be closed. But we're there most days, been doing that room for a good part of a decade, and I have people that have been in that room for almost 10 years now. I'm going to give you our weekly confluence levels on the P. Again, that's kind of our weekly pivots, our weekly resistance, 2 levels above, weekly support, 2 levels below. I'm going to give you the daily buy-sell levels. That's our version of a daily pivot with 3 levels above it for resistance, 3 levels below it for support, identifying the key buy, identifying the key sell, which I think is going to be the range on the day. I'm going to give you the intraday scalp levels. I'm going to give you the key level indicator, and I'm going to give you the high probability gap indicator. A lot of value I'm giving you here. And I've never done anything like this ever before. I'm doing it for the Trade Thirsty crew for the first time ever. And I might be kind of crazy for doing it because this alone comes up to almost $1,700 worth of product. And this is no joke. You go to my site, you can see I sell one of my signal tools. You're getting a piece of it. I sell one of my signal tools for almost $2,000. That's the cheapest product I have on my site. Okay? So what I've done here, I've put together something very special for you, and you're obviously not going to pay that. I'm going to just let you take it on for a trial. $47. It's over 95% off. I know it's crazy, but for $47 today, come test drive us for the next 2 weeks, right? If you like what you see, stick around. I'm never going to charge you an upfront price. It's only going to be $79 a month. It's just going to be a month-to-month subscription. You'll have the indicators as long as you're there. You'll have access to the training as long as you're there. If you decide it's not for you, you unsubscribe, no problem, no foul. We're not in any type of year-long contract or nothing. You just will lose access to your indicators and tools. Obviously, you'll be able to keep the Renko candle and the gap training and that sort of thing, but the indicators are licensed monthly, and it's just a month-to-month. So $47, come take us a test drive. Go get that at newbie-trader.com/thirsty. newbietrader.com/thirsty. And, you know, the $47 is just for a 2-week trial. If you like it, great, you'll stick around, and you'll never see this price. You know, I don't know. I may do this. I've never done it before. I've never, I don't even do room trials, right? A lot of people have been around for a long time, and whenever I opened the room for a trial, it was a disaster because there was a lot of tire kickers, big waste of time, and so I just haven't done it. I haven't done a room trial for years, but talking with Jeanette and everything, I just thought I was going to do something special, and so it is crazy. But you know what? What did I tell you a minute ago? I have people that have been in my room for almost 10 years. So if you become a lifelong customer and love my product and stick around and make money with us and be part of our room and like our indicators, right, it's good. I'm fine. I don't want to take a big lump sum. I believe in what I have. I believe in my product, and I believe I can teach you how to use it and use it for a long time, and you're going to love it. So I don't need to charge $1,000 right now or $2,000 right now. Just come on board, test it out. If you like it, the water's nice, stay in. All right, so do you feel like knowing in advance where the market is likely to turn could provide you with consistent trading opportunities? Well, that's what our micro and macro pivot bands do. The way I see that, you have basically three choices. First option, you can do absolutely nothing. You can sit on these webinars all day and take in all this knowledge and just let it be that, knowledge. You can be a lifelong student. That's great. Your section option, which is what I encourage all of you to do, take what I've taught you about the Fibonacci's, the symmetry levels, and the Gantt fans, but start throwing them on charts. See if you can identify these areas. Yes, it's work, but guess what? Most things in life that are worth having take a little bit of work to get. So go do it. You have the information. I provide it with you. I'm going to give you the candle. I'm going to teach you about the gap. At least do something. Don't be that first group. But third, I think is the easiest, and it's what I've been asking you to do. Try us on for 2 weeks. $47. Skip one meal over the next 2 weeks. It'll cover you. Take our trial. Join the live trading room. Get access to all of our training. I'm going to show you, whether you stick around for 2 weeks or not, I'm going to show you everything that goes into that fractal tool of mine. And it's going to absolutely blow your mind, that 15 hours of education I'm giving you there. And it was designed to take somebody that's never traded before all the way through to understanding how to use that tool. So that alone is worth your 2 weeks. If nothing else, lock yourself in the room. Again, it's newbie-trader.com/thirsty. Again, I implore you to go right now. I'm giving you $97 off of true value, and you usually can't even get into my my products for under $2,000. But anyway, special group, special opportunity. This kind of fell in my lap, and I want to thank all the folks at Trade Thirsty for giving me this opportunity. I have about 12 minutes left here, and I want to use those to go to live charts. Okay, so stick around, but let me make good on my promise first. I told you I was going to give you this bonus. It's the high probability gap system. Remember the green box we talked about? Just go to newbie-trader.com/NTRinco. You're going to get a free download of that candle. Now that candle is good for NinjaTrader. On my site, when you're at Newbie Trader, just go to the Partners tab and you'll see a link for the NinjaTrader demo. Just download it. Download this candle, and if you join the trial, you'll get all these indicators. As soon as you purchase, you'll get the opportunity. You'll be immediately in the members area. All the downloads are there. Now I'm going to have to turn you on, and I'm going to go spend some time with my son this afternoon. He's a junior golfer. He's a 7th grader that made the high school golf team here in South Carolina. Very proud of him, but I have a golf date with him after this presentation this morning. So if you go purchase now, start going through the education. If you download the indicators, I'll be back this afternoon. I'll get them all turned on, and you'll have all day tomorrow to get going, and we'll see you in the room on Monday. So anyway, hope you take us on. I'm going to open it up for questions. I see a lot of questions coming by, but briefly, before I do that, we have about 10 minutes. Let me just walk you through an example on this chart from this week. Can I do that? If you'd like me to walk through the chart and show you some examples, just say, show me the chart. And I hope you're excited about the opportunity I provided here. I'm getting a lot of show me, show me, show me. What about the MT4? Okay, the whole thing that I showed you here was around support and resistance, right? And these levels can auto-populate on your charts if you have NinjaTrader. I don't have every platform in the world covered. And I've always kind of dealt in the NinjaTrader sphere, okay? Shame on me. But I can get you that platform for free, and you can at least throw it up there, and you don't have to learn a new platform. Don't even worry about that at the moment. These levels you can manually put on any platform you want. You're only talking about 3 levels above the market, 3 levels below the market. So you might have to put 6 lines on your chart on the daily basis, plus these intraday levels. Don't get hung up on the fact that that indicator might not be there for you. Come to the room, see what we do, watch us do this stuff live. And then in 2 weeks, then you got a decision to make, right? Don't walk away, right? I think it was Jim Rohn. I don't know if you guys do any of the self-help stuff, but I remember I used to listen to Jim Rohn, and he talked about the whole thing about the neighbor and the shovel, right? 2 guys in the yard, and a guy tells his neighbor, I'm paraphrasing, I don't remember it verbatim, but he's like, hey, go grab a shovel. Help me dig up some of this gold. And the neighbor guy was something along the lines like, Do you know how expensive shovels are? I don't own a shovel, right? So don't let silly things be obstacles in your life, or you'll just kind of stay where you're at, right? So anyway, let's get off that. Let's look at a chart. Can you all see my chart right now? If you can see my chart, just say, heck yeah. All right. So this is that weekly chart I showed you earlier. Remember at the top here, you have that weekly resistance level, daily pivot. Let's just kind of zoom in. I'm going to just step you through here. I'm just going to step you through a quick symmetry lesson here. We'll start with yesterday. So all I'm going to do is I'm going to just put off this first move. I'm going to put my extension tool from the low to high. There's my first. We break 100%. What do we expect? We expect it to go to 161. If it breaks 161, 261, 361, 461 can all be reactive levels. So it's pretty obvious when we broke 100, you can see that 100 was key because you acted as resistance initially and went right through 161, and it just so happened to go up to an area that day that I said was our key resistance area. Very strong day Thursday, but look, it reacted at our area and then ended up just climbing higher the rest of that day. All right, so that's the first one. So let's go on the next higher time frame. There's our next level. Breaks 100. Look for 161. Look, we got reaction on the bottom side of the 261 area, and then it pushed up to 461. But look over here on Friday. See how it's reacting to these levels from Thursday morning. Thursday morning at 10 o'clock. See how they're reacting to these levels on Friday? All right, so there's your next higher. Let's throw a Fibonacci on there. Comes down to 78%, reacts, goes through the 23%. Okay, now we're starting to see some clusters. Are you seeing the clusters I'm seeing? Do you see how we have a 161, a 61, a 161, all starting to line up off this reaction on Thursday morning, and lo and behold, it ends up turning into one of my minor buy zones for Friday. All right, so this is starting the basis of it. Let's go up here to the overnight session. Let's look at the first swing off the swing high to low. All right, it breaks the 100% level. Where does it go? 161 reacts. What's that 161? The old 261 off of the next higher time frame extension on Thursday. Okay, what's at the 261? That becomes part of our daily pivot. Look at the confluence we're starting to see. So that's kind of, that's kind of what we do. We kind of look at that symmetry. We kind of look at Fibonacci. I'm not going through the GAN on here just because it'll get too darn confusing to me showing it all. There it comes back to the 78. Look, 23% extension, reaction. 160 or 61% extension, reaction. Next higher time frame. 50% retracement, reaction. 23%. That's part of our daily pivot. So, whether you don't be the do-nothing, right? I told you those three options. Don't be that do-nothing guy or girl. Go start throwing these on your own charts. Go download this Renko candle and just start throwing this stuff up. You're going to be amazed. Hopefully, this presentation is going to be life-changing for you. I know it has been for me. I know it has for others that have joined me in the past. My time is up here. I'm going to go through the questions real quick and see if there's anything I can knock out of the way. About 4 minutes, but thank you so much for your time. I know I threw a lot of information on you in a very short period of time. I don't apologize though, right? All you got to see is there's an opportunity. You have a decision to make. Hopefully make a decision to take advantage of this opportunity, and we'll spend a lot of time together over the next 2 weeks, and we can go into a lot more detail. I'll be with you 2.5, 3 hours every morning for at least 2 weeks, and you have about 15 hours online education. So thanks for being here. You can bail out again. The site, if you'd like to go to it, is newbie-trader.com. Maybe Jeanette or somebody can get it in there, /thirsty. All right, let me try to get to some questions here. They're coming by really fast. Can I take you up on your offer but start my trial in about 2 to 3 weeks? My full attention is required somewhere else right now. It's $47, and then it's going to roll into $79, which is still about 60% off of any monthly. This offer will expire. The price will change. You have about 2 days to take advantage of this. Yes, it will take your full attention, but this pricing point structure at this discount level, we're just going to be able to keep it open for 2 days. I can't keep it open. What I would say is go ahead and join, consume what you can, and you know, worst case, you got to monthly renew. But trust me when I say it's definitely going to be worth it, and I want you to get the best locked-in rate. So Ben says he'll use his hands to dig the gold. Claire, if you want to try it in April, that's fine. I would go ahead and lock it in. I don't know that this offer will ever be up again. What are your tick settings on your Renko? You can you want. I like, for when I'm looking at longer term, I like to use an 8 NT. It's an NT Renko. It's the special one. No, they're my special candle. I mentioned that earlier, Doug. You can get it for free. newbie-trader.com/N as in Nancy, T as in Tom, or newbie trader, NT Renko, R-E-N-K-O. Got about another minute or two. Let me just get through some more of these. Again, I'm not using time frame. We take time out of the equation. We are using pure price-based action. My trading room, by the way, let me just shut this down. My trading room, this is a screenshot of the trading room, okay? So here's that tool, 182 ticks on Friday, which would be the equivalent of $910. Don't worry about trying to see all this. This is that tool that I'm going to teach on. 42 ES ticks, 525 if you had all those. Now, I'm not saying that's what you made or whatever. They are what they are. But we also show 2 other auto signal tools. So our room is showing 3 auto signal tools. I mean, it marks the trade entries for you in the room. Then on top of that, we do our analysis and symmetry projections. We basically watch the YM and the ES. And then I teach you, scalping stuff. I teach, I mean, we bring a lot more into it, but this is the 3 main charts. But yeah, we take time out of the equation. It's all price-based. Well, I don't call every trade, Jose. We do call trades in the room, but the thing is, we have 3 different signal tools going on. We're talking about setups, and we're talking about these reactive areas in the layout of the market. The triggers are there for you to use and see. The tools are there. But yeah, we have, everything is automated. We programmed it all. Yes, this is being recorded. The bottom that looks like a MACD, that is our delta tool indicator. It looks like a MACD, but it's really measuring delta, and that's part of what you get. I'm giving you that delta indicator. John says, great set. You're welcome, John. On fib level, minus 23, yes, and it's minus 23. Okay, the fib is minus 23. And minus 61.8. Minus 23 and minus 61.8. And you can also use a 123 and a 161.8 for levels below. All right, my time is up. My email, we're going to post the link into, let me see if I can post the link. I'm sure I can. Give me 1 second, I'll post the link.
Hey, Matt, we've been posting it. It's going to the entire audience, and it's in the question box. So
okay,
I'll get. I see some people asking for it, but we're posting it. And there's
my time is up. Thank you, everyone, and appreciate you having me here.